In March 2026, major combat operations commenced across the Middle East, sparked by targeted strikes on nuclear research centers. The conflict initiated with an Israeli airstrike targeting Iran's Natanz nuclear enrichment facility. Tehran responded by launching a barrage at the town surrounding Israel's Dimona nuclear research center, injuring over 100 people. Shortly after, U.S. President Donald Trump issued a strict deadline of March 27 for Iran to accept a deal that halts its uranium enrichment and relinquishes existing stockpiles. That specific date reveals the true parameters of this conflict. It is a regional military war operating on a strict macroeconomic clock. The geographic vulnerability dictating that timeline is the Strait of Hormuz. Roughly 20 million barrels of crude oil and 30% of all global seaborne hydrocarbons transit through this narrow corridor every single day. The ultimate ceiling on the combined U.S.-Israeli military operation is set by the threat a closed strait poses to global liquidity. If military objectives require the strait to be disrupted for longer than 4 weeks, the restriction of those energy flows will trigger a global inflation shock. To mitigate risk, the U.S. and Israel are executing a systematic degradation of Iranian infrastructure. Combined forces have destroyed approximately 330 of Iran's 470 ballistic missile launchers. Strikes also targeted Artesh aviation bases and IRGC regional headquarters in Esfahan and Tehran. The operational intent is the total dismantlement of Iran's decentralized threat network to prevent any coordinated retaliation. While tactically successful, locating and destroying buried or mobile assets is a methodical process requiring time that the global economy cannot provide. In response, Iran is utilizing proxy networks for asymmetric cost imposition. This involves launching cluster munition-equipped ballistic missiles at civilian infrastructure, successfully striking areas like the Arad region. It also relies on sustained proxy barrages. In a single 24-hour period, Hezbollah launched 55 separate rocket and drone attacks on northern Israel. To overwhelm regional air defenses, Iranian forces have deployed cheap, high-volume drone swarms, targeting Gulf data centers and regional military bases. These asymmetric tactics aim to drag out the conflict's timeline, weaponizing time against the U.S. and Israel. That extended military timeline exerts immediate pressure back on the Strait of Hormuz and global shipping markets. Maritime crossings through the strait have plummeted by more than 70%. Currently, over 200 oil and LNG vessels are anchoring completely idle just outside the waterway. Skyrocketing war risk insurance premiums and precautionary operational pausing by major shipping lines have effectively paralyzed the route, regardless of physical oil availability. The mere fear of escalation is enough to paralyze the global energy supply chain. The immediate consequence of this maritime paralysis was an initial price spike, pushing Brent crude to $82 per barrel. As ships delay transit or reroute, a 20% surge in bunker fuel prices translates directly into 15 to 20% higher freight costs. Those elevated freight costs point directly to a 0.3 to 0.5 percentage point increase in core retail inflation. For the U.S. Federal Reserve, this represents a severe threat. With U.S. core producer price inflation already accelerating at 3.6% year over year, the central bank has no room to absorb a new supply shock. A paralyzed Federal Reserve forced to abandon expected rate cuts to fight sticky inflation is the ultimate threat to institutional investors. Allianz models 3 scenarios dictating the war's outcomes. Baseline anticipates a sub-4-week conflict, oil peaking at $85, preserving rate cuts. Prolonged maps a 3-month war, pushing oil to $100. Tail risk projects a sustained conflict, spiking oil to $130, triggering a 20% equity crash. The physical duration of the military conflict dictates the severity of the global recession. To shorten that duration, diplomatic back channels have opened, featuring indirect negotiations with Iranian Parliament Speaker Mohammad Bakr Ghalibaf. These negotiations highlight a core tension. The military requires time to fully dismantle the IRGC, but the global economy cannot absorb a prolonged blockade of the strait. The White House's political timeline and the military's operational timeline are converging on a critical 4-week threshold. President Trump's decision to extend the diplomatic deadline to March 27th is a direct acknowledgement of this exact threshold. Extending operations beyond this 4 to 6 week window transforms a regional containment campaign into an unstoppable global liquidity crisis.